of the title, so that's good. We're going live. I'm posting on LinkedIn, so everybody knows that we're live, and we can start in like 2 minutes. I'll start, guys. I'm gonna introduce everybody what we're doing here today, and then I'll let you guys introduce yourself and go from there. So, okay. You can guys talk until I'm doing something, no? Because you can practice, if you want.
Peter, those yellow things behind you, are they just an optical illusion? Or are they post-it notes that are really, really close?
Post-it notes. And we have a whiteboard on the other wall over there. So, and that thing just looks like it's been graffitied all over the place. So, yeah. It's been fun with those. I can't wait to get those things down. We did our planning earlier this year and kind of the support teams and all that other fun stuff. So we're outlining how it's all going to work.
Nice.
So it looks more.
All starts on a piece of paper.
Yeah.
I can't unsee that now. They do just look like either giant post-it notes or that you've been shrunk.
It's been zoomed right in.
Yeah.
So disregard me altogether. Just look at the post-it notes. That's all it really is.
Okay, guys, so now we can go official. Now, by the way, we've been live since you joined. So whatever you said, it's people saw and heard that. So they know that we're unsexy. We all dress like bumps, but it doesn't matter. No, here we're not here because we're pretty. We're here because we're unsexy and we know it, but we don't care and we ignore that. So that's why I know we have this topic today. We're gonna talk about the unsexy webinar. Okay, man, how do I start that? See? Okay, so I've been waiting for a long time to do this webinar because I've been doing a lot of sexy webinars. But of course, no, sexy doesn't mean anything if your books are not clean, if you don't know what you're doing in your business. So that's why we decided to do this webinar to kick off the year. The title is, as you see, the Unsexy Webinar: Bookkeeping, Automation, VAT, Sales Tax, Accounting, and Business Setup. Today with me are Arjun Mahadevan. He's the CEO of doola. They're doing business setup in corporations in the USA. I'm not going to tell you more, guys. He's going to introduce himself. He's going to tell you what they do, who they help, and why companies need that. Then one of my close partners, Dan Little, who is the co-founder and CEO of Link My Books, is going to talk about automation, how you guys can save a lot of time if you automate your bookkeeping and accounting. Then Joe Cox from Ecommerce Accountants is going to talk about e-commerce accounting. Accounting for e-commerce businesses, because this is very specific. There is a lot of accountants, but you need to know how the e-commerce works to do it the right way. And then we're going to have Peter Mantell, the CEO of Ampersand Accounting, which is a company which provides sales tax in the USA. What you need to know about the USA, because if Europe is hard, USA is more complicated because of the thousands of jurisdictions. This is what I know from Peter, and I'll be the last to speak because Europe is probably the most unsexy place. We have so many countries, so many VAT, so many languages, but it doesn't matter. It's a good vacation spot, and you might not know it's a very good spot to expand your business because a lot of companies are not doing because it's hard. So let's kick it off, guys. Before we do that, we're gonna do like a quick spotlight for Extreme Power Brands. This is my partnership agency. I'm the co-founder of this company, and also I'm running the partnership for hellotax and 20 other companies in the space. So what we do, we're a partnership as a service agency, and we have a network of over 1,000 service providers. And the bottom line is we help companies to expand for partnerships. That's what we do. And every webinar that we do once a month, we give away one free partnership audit to e-commerce service provider. So if you're one, we can do a free partnership audit and we can tell you if you're good at partnerships or if you suck or if you're really good. So let's go over to the agenda. So Dan is going to start and he's going to talk about himself and Link My Books. The topic is how to automate your Amazon bookkeeping and correct your VAT bill, because he has a good surprise for you. Some of you guys might be overpaying VAT, which is not good. Then Joe is going to talk about e-commerce accountants, and the topic is expanding into the UK. an overview of UK VAT and how to stay compliant in the UK. Then Peter is going to take over and he's going to talk about navigating sales tax compliance in the USA, a comprehensive guide for business owners. And then, Arjun is going to talk about doola. He's going to talk about forming an US LLC and getting a US bank account remotely from anywhere in the world. I had no idea that you can do that. So it's a new topic for me as well. And I'll talk last. I'm going to talk about hellotax, what we do here. And my topic would be expansion to Europe in 2023. 400+ million coins are waiting for you guys. I'm not joking. So that's real. Of course, we have a Q&A session at the end. If you have any questions, feel free to write them in the chat. We have over 15 questions from people who cannot join, but they're going to watch the recording, so we're going to answer their questions as well. So let's kick it off, guys. Dan, please introduce yourself. I'm going to stop sharing. Tell us more about you. Tell us how it's to spend a winter in a summer spot in the middle of the ocean, and tell us more about you guys. What do you do? Who you help, etc. Thank you.
Yeah, cool. Well, thanks, Nick. Thanks for having me here. And so I'm Dan. I'm the CEO of Link My Books. And we started around 4 years ago, came off the back of me being an Amazon seller previous to that for about 4 years. And as Nick said, normally I live in Sweden. You might hear that I'm not from Sweden. I'm actually from Newcastle in England. But I'm currently in Gran Canaria just because the Swedish winters are awful and it's 30 degrees here. So why not? So what we're going to go through today, let's have a look. So I had a little agenda. I only have 8 minutes, so we're going to speed through this. So a little bit about who I am, about the hurdles of bookkeeping, how Link My Books can help, a quick demonstration, how to get started, pricing and Q&A, but we'll probably just do the Q&A right at the end. So who am I and who's Pete, my business partner? So we are both actually ex-7-figure Amazon sellers, which I said. I exited my business in 2018. He exited his in 2019. Got a bunch of likes on the screen there, but conscious we've only got 8 minutes, so I'm going to push on from that. Basically, the top and bottom here is we sort of know stuff in this space. We're quite well experienced in running large Amazon businesses, and the team that we've got with Link My Books made up of accountants as well. So we've got a good bit of experience behind us. So I don't know whether we can do this, Nick. I didn't ask you this before, but can we do some sort of poll where we can ask the audience a question here?
You can do anything but undress yourself. Don't do that. So.
Yeah, that would be very unsexy. Okay, so quick question for everyone out there. So we see in the industry that people are generally doing one of 3 things for their Amazon bookkeeping. It comes down to these A, B, and C. So if you can in the chat or something like that, just write A, B, and C if any of these apply to you, and then we can have a look at that afterwards. But essentially, it normally boils down to entering your sales and fees as a monthly summary, entering your individual orders, or using some sort of magical spreadsheet and lots of your time to effectively make sure that everything is correct in terms of where orders are going to, et cetera, and making sure that the correct taxes are applied. So while you're all putting those answers in, I'll have a look at number 1, which is people use this report. So the date range report from Amazon, and they basically take the income figure and they take the expense figure and they slap those into Xero or QuickBooks, and then we're done, right? But the problem with that is that it's not accurate. And the reason it's not accurate is, well, there's lots of reasons, but a couple of the main reasons are, if you're based in the UK, then you need to be separating out your sales and refunds by where they're going to make sure that you pay the correct amount of VAT. And the same goes for your fees as well. There's various different tax rates that get applied to fees. You need to be making sure that you separate those things out. And the second main reason is that included in those income and expense figures are often Amazon reserve balances. So where Amazon is holding on to some funds for future payout. And those are just your cash that's floating around. They're not a turnover item. And therefore, you need to be separating those out as well. I will come to that a bit later on. Now, entering individual orders into Xero is extremely hard to reconcile because you've got payouts every 2 weeks. And now you've got loads of orders. How on earth are you going to reconcile those together? And then using spreadsheets is the most accurate, but it's not completely accurate because it's prone to human error sometimes. You can drag down the wrong formula, you can insert the wrong data, et cetera, et cetera. So what is the solution then, Dan? If all that's rubbish, then what should we be doing? Well, of course, you should be using my product. but that's maybe for you to decide. So accurate, automated, and easy to use. That's what Link My Books is. And what we do is we effectively sit between the sales channels like Shopify, Amazon, Etsy, and eBay, and your bookkeeping platform like Xero and QuickBooks. So how does it work? Well, every time you receive a payout from the sales channel, let's take Amazon as the example here, it'll collect all the data from Amazon, and we'll make sure that we can break down what that payout is made up of. So this is a screenshot of our dashboard, and this fictitious client has received a payout from Amazon.co.uk for £10,000. So what's that made up of? Well, that's made up of various things. And so what we've done here is we've separated that out into sales that have gone to the UK and outside the UK, all the different types of fees, and all your refunds as well. And the reason we separate those things out is because there's different tax rates to apply to those things. So it's really important that you do that. So before, when we talked about the typical way of doing things is to just take that date range report and take your income and your expense figure and slap those into Xero QuickBooks, and that's it, you're done. Well, unfortunately, as you can see here, that results in you overpaying VAT. So by not separating out your sales and your refunds and your different types of transactions, in this case, this £10,000 payout has resulted in the client paying £616 too much VAT. And so by using something like Link My Books to automate that, not only do you save a lot of time, but you also end up saving loads of VAT. Just like 2 weeks ago, we had a client that did this and then realized they'd been overpaying VAT. So they went back and redid their books for the last 2 years, and they ended up basically saving £100,000 of VAT. So I posted about that on LinkedIn, and it went sort of like semi-viral, 1,000 views, you know. So what does that look like when it gets into your Xero account? So nice and clean, basically. It means you can easily identify your opportunities. You've got all your sales and refunds and all the different types of fees broken down. Everything goes in the right places in your bookkeeping system. But that's not all. You can also do a bit of work and a bit of magic around cost of goods sold. So obviously one part of accounting is your sales and fees, but then the other part is how much did you pay to make those sales? So the inventory that you purchased needs to be accounted for as well. And that needs to be done as and when it's sold, hence the word cost of goods sold. So what we do is we will help you to automate that as well. So you tell us the land cost of each of your items, and then as you are selling them, we will make that adjustment in your bookkeeping. So you'll end up with another little line in your P&L, which is Amazon cost of goods sold. And now your operating profit at the bottom is actually a true reflection of your net profit. So you'll be able to see all your sales minus your costs, minus all your business expenses, plus all your other expenses, obviously paying your VAs and things like that, softwares. But you'll be able to see a much better picture month to month of what it looks like. So what do you need to do? Well, it's actually quite easy. So every time you get a payout from Amazon, you'll have a deposit line on your bank statement, and you'll have a corresponding invoice from Link My Books. So all you need to do is just click OK in the middle or match on QuickBooks, and that's it. You're done. It's reconciled. You've now got an accurate P&L. You've got a VAT return if you're a UK customer, which is showing all the correct figures and you're paying the right amount of VAT. And it's a one-click reconcile. So now it takes you like a couple of minutes every month to do your bookkeeping. So that's all good and well, but so it must be really hard to set up, right? Well, not quite. It's actually quite easy. 4 steps. 2 of those don't apply if you're not in the UK. So the first step is if you have an Amazon account here, for example, we split all those different transactions of the payout down into these transaction categories. And then you choose an account that you want those to go into. It's no more complicated than that. The second thing is if you're a UK customer, you tell us where you've got VAT registrations. And the third thing, again, UK customer only, tell us if you sell any Xero rated or reduced rated products, because we need to separate those out as well. And then the last step, which is for everyone, is to just confirm your tax rates. So we actually pre-fill these for you based on our sensible defaults, which we've sort of done in collaboration with our experience and the accountants in our team. And a lot of information that we've detected from your sales channel and also from your bookkeeping platform to make sure that these are pretty much as accurate as you can get. It is obviously your responsibility to make sure they are correct for your business, which is why I'll put that little tick box at the bottom. I do want to go through this on a call. We can arrange those normally next day. So you can jump on with one of the accountants in the team and go through your setup, make sure everything's correct. You've got the email and chat support afterwards during normal business hours. All the plans have a free 14-day trial, and you can actually go back up to 24 months if you need to redo your bookkeeping like that guy did the other day. So if you want any more information on pricing, head across to linkmybooks.com/pricing, and you can actually play around with that slider and see how much you would land on depending on your size of business. And that's it. Hopefully that was less than 8 minutes. Any questions you can take now or at the end. And again, get started for free at linkmybooks.com.
That was quick. I was barely able to update the LinkedIn post and do my other stuff. So you were very quick, by the way. So all good, guys. I mean, I see we have some questions, but we're gonna move ahead because I mean we have other speakers, so we don't want to keep them waiting.
Understand.
So I think I need to check my agenda, but I think it was Joseph, if I'm not mistaken. So Joe, it's your turn now. Now we understood how you can automate your bookkeeping, how it reclaim your VAT, but now you're going to tell us about e-commerce bookkeeping, VAT in the UK, and go ahead and introduce yourself, of course. Thank you for joining.
Amazing. Thanks so much, Nick. Thanks for hellotax for hosting this, and also thank you, Dan, for going first and starting the Unsexy webinar. You might be thinking that it started off from sexiest to least sexy, but it's definitely got unsexier now that I'm here. So I'll let everyone else decide. Right, let me just sort this out. Set up. Hopefully I'm sharing the right screen as well, because Dan, I think you were showing the wrong screen there, mate. One other thing as well on Link My Books, for anybody who's not a user, we at Ecommerce Accountants use them for all of our bookkeeping clients and strongly recommend them. Dan isn't an accountant, but he knows so much about that. So I definitely recommend that you use Link My Books if you're on the fence about what to use. Anyway, into this presentation. So first of all, who am I? Who's this ugly bloke who's sitting here talking to you today? My name's Joe. I'm an ACCA chartered accountant, which basically means I've done a bunch of exams. And prior to that, I was an Amazon seller. So in 2012, I had a very similar story to Dan. I started an Amazon private label business. We got to, it grew really well. We had, I won't go into that too much because I've only got 10 minutes. But basically the business got to the point where I effectively sold it. And in 2016, I started Ecommerce Accountants because although I was a chartered accountant, I realized that there were no accountants in the UK that specialized in working with e-commerce businesses. And at that point, we didn't have things like Link My Books. So when dealing with Amazon sellers, things were way more technical. Currently, we work with over 300 businesses in the UK and around the world. So not gigantic, but we kind of work with quite a lot of businesses. VAT is probably one of my favorite taxes, which I think is why I was invited to this Unsexy webinar, because what's more exciting than that? The reason for that is that there's so many different facets to it. Corporation tax, those of you that deal with stuff in the UK, very basic. Income tax is a bit more interesting, but VAT, there's loads of different components and aspects to it, where what type of products you sell, change things, where the goods are stored, the value of the goods, all of that impacts whether there's VAT or not. In this kind of brief summary, we're going to make a few assumptions. So I'm going to assume that most of you or the people that listen to this are not in the UK. I'm going to assume that you're an Amazon seller, so you're selling goods on an online marketplace, which is an OMP. We're going to assume that you're actually selling goods, and by that I mean physical goods, and we're going to assume that they're standard rated products. So first of all, what's VAT? And also, how exciting does this slide look? I really love it. So VAT stands for value added tax. It's a sales tax in the UK. So if you're in the US, VAT is your equivalent of sales tax. If you're in Australia, New Zealand, it's the equivalent of GST. And in the EU, you've obviously got VAT there too. And it's a tax on the end consumer, which means that basically value passes all the way down the chain, and any business that pays out VAT claims it. I'll go into that in a second. Who needs to register for VAT? So in the UK, there's an £85,000 turnover limit. However, if you and your business are based outside the UK and you supply any goods or services to the UK, there's a very, very high chance that you actually need to register for VAT from the very beginning. There's also a caveat that if you expect to supply goods or services in the next 30 days, you need to apply. But in practice, HMRC can't really enforce that. But in general, if you're planning on selling goods in the UK, you should register first. And as I said, there's no turnover threshold. So if you're going to make a shipment of goods to the UK, make sure you register. Who does not need to register? And there are some instances where you don't need to register. Based on the assumptions that I used earlier, I'd say that it's businesses that store goods outside the UK. Well, the definition is if it stores them outside the UK and sell them on an OMP, or an online marketplace. So in this instance, if you're an FBM seller, so you're storing goods in, say, a US warehouse and you're shipping them to UK consumers after selling them out on Amazon, then most of the time Amazon should be collecting the VAT and you don't need to register. There is some instances where you might still need to register and they'll tell you, but in general, if you're shipping and storing your own goods, you might not need to register, but it's kind of quite rare from what we find. So what is VAT? So it is, or sorry, how much is VAT? In general, I mentioned before, the standard rate is 20%. You can get sometimes when 0% or 5%, but in general, it's 20%. And to kind of give a more relevant example for people in the US, in the UK and in the EU, we don't add sales tax at checkout. So our pricing usually contains VAT. So we're often surprised when we go abroad and you buy a bottle of water, you see it's $1, and then at checkout it's like $1.30. Kind of annoying. In the UK, EU, that doesn't happen. So if you sell something for £100, it should actually be, you'll be inclusive of that. And at the bottom there, I've shown that the way you calculate your selling price is you divide it by 1.2, and that will give you the VAT component. So if it's £100, 83.33 is the selling price, and actually there's £16.66 of VAT. And how does VAT work? Again, very simplistic overview here, but you have two types of VAT. You've got input VAT and you've got output VAT. Input VAT is the VAT that you pay on purchases to all of your suppliers, and output VAT is the VAT that you collect from your sales. Kind of sounds backwards because input VAT, like, from your purchases, really money coming in is from your sales and output is from your purchases, but it's to do with the invoices. So the invoices going in and out. So if you're issuing an invoice to someone, it's output VAT. Either way, what you would do is you look at all your input VAT, you look at all your output VAT, you deduct all your input VAT, and you get the net result, which is a VAT, usually your VAT liability. But if you've got a load of reclaims in there, you can also get, it could be an asset, so you're getting money back. Now, the other thing to note is usually it's a quarterly VAT return that needs to be prepared and submitted to HMRC. Now, if you're an overseas business, you might be asking, what VAT am I going to be reclaiming? I'm not paying any VAT, so how am I going to get, what money am I going to get off my VAT bill? Well, you might have import VAT to pay. So when you ship all your goods into the UK, you're usually charged VAT, although there's now the postponed VAT accounting, which I'm going to talk about on the next slide. But other than that, there's not really much you can reclaim. So it's kind of more straightforward than if you're a UK business. If for some reason you're charged VAT by someone with a GB VAT number, let's say your accountant charges it by mistake, which would be a bit bad, but or Link My Books issue you a VAT invoice, then you might be able to reclaim that. But in general, services and the way they work, you shouldn't be charged much VAT. Postponed VAT accounting was introduced in 2021, and it essentially cuts out the whole, the faff of having to pay the VAT and then reclaim the VAT. So it allows businesses to essentially declare it and recover it on the VAT return. You might ask, what's the point? I think HMRC want to see it for sort of internal reporting. Effectively, it preserves the cash flow of your business. It's a completely optional scheme as well. So if you're not on the PVA scheme, speak with your shipping provider, because it's a bit of a no-brainer, as there's no point paying it out and then reclaiming it when you can just not pay it and delay it. A couple of other points on that. So you've got three main schemes. So you've got the standard scheme, which is the most common and which most people deal with. And that's essentially where you do a VAT return, like I explained, every quarter, and you have 4 quarters in a year. Or you have the annual scheme, which lets you do one return and then you don't have to worry about it for the rest of the year. The problem with that annual scheme is that if you've got reclaims, so if you're a UK business and you've got a lot of expenses, it's very difficult to, it's basically, you can only do the one return, so you can't be reclaiming stuff. And And you also need to make advance payments towards your VAT bill. So sometimes it's not good for cash flow. And it's also for smaller businesses, so those with less than 1.35 million in turnover. The other thing that's pretty interesting and that gets overlooked sometimes, especially for non-UK businesses, is the flat rate scheme. And that's where you pay a fixed rate of VAT. You have to be like really small, so you have to have less than 150k of VATable turnover to join. But if you're starting off and you're expanding into the UK, definitely something to think about. You have to leave the scheme when your turnover is above 230k. So if you're listening to this and your turnover is already 200k, you can't join it, even though you could have if you were less than 150k and still been on it. The way the flat rate scheme works is you still collect the 20% VAT. You can't reclaim any input VAT. So rather than looking at how much VAT you've collected and how much you've paid and working out the net figure, you just look at the amount of VAT you've collected and then you apply a percentage to it. So in this case, I've shown that if you collected, say you made £1,000 worth of sales, you'd have had, if we divide that by 6, we have 166.67 of VAT that was collected, and so technically due to HMRC. And then if we look at the flat rate scheme, we would times that 1,000 by 7.5, which is 75, and the difference between that is 91.67. So really, again, it's a bit of a no-brainer in most instances for an e-commerce business because you're saving money. If you're a non-UK business, you've not got much VAT to reclaim. So again, it's a good way to pocket the difference. There is a warning and a caveat to that, and that's that you still have to apply the percentage to zero rated goods or 0% VAT goods. So if you've got a high proportion of goods that are getting shipped out of the EU, if you're selling coffee or sort of baby supplies, you don't ever want to be on the flat rate scheme. And there is another warning, which didn't fit onto this slide. You've got, there's a new concept of limited, well, new, it was brought in 2016, the concept of limited cost traders, and those are businesses that spend less than 2% of their VATable turnover on goods. If you're caught within that, so if in a period you spend, in this example, say you've got £20,000 of turnover and you spend £400 on goods, if you spent less than 400, you would be put on the 16.5% VAT rate, flat rate, rather than the 7.5%. So you might actually mistakenly have been having to pay basically more VAT. Either way, the rules are really complex, so speak with an accountant. That's my quick crash course on VAT. Sorry if I've been rambling on like a madman, but clearly I love it. Put some next steps here. If you're a non-UK business, at Ecommerce Accountants, we do provide UK VAT services. So usually we charge £95 to register for VAT and £195 when someone signs up, and then £50 a month. But if you've listened to this, when you get in touch, we waive the £195. Please quote it to myself or Stefan, who deal with all of our new client inquiries, and we'll be happy to help. If you're a UK business and you're listening to this and you already know everything about that and you're interested to talk and switch accountant or engage an accountant, we provide a range of services: accounts, tax, bookkeeping, VAT, reports, loads more. If you quote this and say that you've watched this webinar with hellotax, then we'll give a 10% discount on the first year's accounting fee. And I'll put a thing for questions, but we're going to do that at the end. Thanks a lot.
Thank you, Joe. I think it's getting more and more unsexy here. So I hope the rest of the guys don't spoil the webinar. Other people are staying, nobody's leaving. So that's exactly why they came for. So now we're going to have Peter. He's going to talk about sales tax. Sales tax at least sounds a little sexier than VAT and the other terms that you mentioned. But anyways, no, Peter is a cool guy. I know him. He's a funny guy. So I'm sure he's going to try to explain it in a more entertaining way. So Peter, tell us more about you guys, what you do, who you are, and tell us how we help companies.
Well,
so
first and foremost, I've tried to explain sales tax to my wife, and she just looks at me very funny. I've yet to figure out how to properly break it down into a format that in layman terms, but we're going to do our best here at least. So let me share my screen. We'll jump into this fun little presentation here. All right. So the unsexiness of sales tax in the United States, for many, this can be a very daunting subject. It can be burdensome, it can be very scary. The US is very big on displays of force. So you'll hear a lot of things about audits and other things, and they love making examples here. The truth is, don't be afraid of it. Don't let it get to you. There are experts in place here to assist you with this process. And we can help you, not only ourselves, but there are other sales tax experts and then there are accountants in this call today that are also very gifted at such a subject. And I would strongly recommend leaning on those accountants, as we've been hearing about COGS and best practices, especially when you're looking at the European markets and so on and so forth. So there's a lot of brain talent here that I'd recommend you listen to. Going into how is sales tax calculated in the United States versus VAT? Here we go. It's going to be a nightmare. I apologize. So in Europe, VAT is very straightforward and simple. It's a flat rate, depending on the country that you're working within. Apologies, guys. I'm oversimplifying from a US perspective. I know it's more complex than that. So, and hopefully Nick will straighten me out on that area. But when we look at how the United States does it, we're very fragmented in nature. There's over 12,000 different jurisdictions, and each jurisdiction is unique. Every small town that you look at on any movie is a unique jurisdiction. So if you've ever seen any movie with small town, middle of nowhere, United States, they have their own unique tax rate. That's how complex we are. So there are various forms of how the tax is calculated. There's origin-based calculations, which is what it means is where the product or good are shipping from. States like Illinois, et cetera, kind of do that origin component. Where it's coming from certain warehouses, and so sales tax needs to be charged based off of where it's coming from within those states that are origin based. Then we add to the complexity destination based states. These are states where you pay the sales tax or you calculate the sales tax based on where the product is going to. And then there's California, and they're just, part of my language, assholes. There's no other way of putting it. They're origin and destination. And so they really like to add to the complexity in the sense of not only are you having to calculate when a product ships from a location in California to another location in California, you have to both calculate where it's coming from as well as where it's going to. Finally, you look at tax exempt states. And so some of the things that you're going to see are like Oregon or Delaware. And in some of these environments, they don't bother with a sales tax. To them, they have other forms of revenue that they're able to make. Now, why is sales tax so relevant to the United States? This is how the US actually is able to record economics. So what is happening and why they're so laser focused on the sales tax is that is how they can figure out what the spending is going on within a state, within a certain region, so on and so forth. And all this data is reported up to the states and then aggregates and reports to the feds, which is then dispersed across the United States and broken down based off of certain trends and so on and so forth. So the reason why the complexity of the sales tax is because of the fact that there's an economic component here, and they're very laser focused in understanding that aspect. Now, all right, so we talked about calculations. That was a nightmare. Let's go talk about exemptions. So one of the other issues now is not only do you have to figure out what the right rate is, but if you're selling products that are such as supplements or other items, those things can be exempt depending on the state. Or in some locations, United States, when it comes to clothing, you'll see a case of where they will have tax holidays. So, for example, at the start of the school year, we're located here in Virginia, and the first weekend of the school year, they actually exempt most goods from sales tax. And the objective is they know they'll probably lose a little bit of sales tax revenue for that weekend, but the goal really is to make sure that the kids are able to get what they need in preparation for school. And so some states take these types of measurements into an account. All right, here we go. Economic versus physical nexus. We've heard this a million times. And, we probably are still scratching our heads as to what the heck it is. I'll be honest with you. The feds and a lot of the entities didn't do a very good job defining things for layman's terms for the average person that wants to comply. So I'm going to try to simplify this as much as possible. In the early 90s, there was a ruling, Quail Wayfair, in the United States that went all the way to the Supreme Court level. The Supreme Court, when they ruled, on this thing. They said it was unconstitutionally illegal at that time to compel a third-party entity that had no operations within the state to have to collect and remit sales tax. In that environment, they incorporated a component called the bright line test. And the bright line test effectively said that if you had a person, place, or thing operating within the confines of that state, then by definition, you have what they would call physical nexus. Now, there's a lot of debate between legal parties in the courtroom as to who the retailer is of inventory. And I won't go into that area because I think I'll leave the lawyers to handle that and figure that part out. But we're on the compliance regulatory side of it, also making sure when these issues are present, protecting the businesses that are associated. So to simplify, if you're using Amazon FBA, they're going to send your inventory to every state they can, because they care about their logistics fees and they want to get as close to the clients as possible. That's their end goal. They don't care about your sales tax implications. They don't care about any of those other things, unfortunately. The thing here is that there's a lot of debate over who is the actual retailer and who's selling the product, since many of you can't contact the end client and other things. And so there's a lot of legal debate right now going on in that area. But as far as the law is confirmed today, if you're using Amazon, they're going to give you Nexus pretty much in every state, because they're going to shove your inventory everywhere, and they're not going to ask you for permission to do that. Now, part of the expansion now that has broadened, because the Supreme Court then re-reviewed Quill Wayfair in 2017, they incorporated a part with the economic nexus. And so what happens here is that they've now, above and beyond physical nexus that Amazon could establish, let's just say you're selling through a platform such as Shopify, and that's your only solution, you own your own brand. Once you hit certain volumes of sales in the United States, you still have to register with the states and collect and remit sales tax. If you're a foreign entity, you're really going to love Arjun services coming up very soon now, because there's a lot of work that you're going to have to go through in registering and getting bank account information, all that fun stuff set up. But the long and the short of it all is that on average, we're seeing in certain states that it's usually around $100,000 or 200 transactions on average. Now, some states like Texas, it's $500,000. Other states like Kansas, they don't even put anything there. They just kind of hit you right out of the gate. The economic nexus and all these things are items that you don't want to neglect or ignore, because of the fact that in the United States, the way it operates is that either you collect the sales tax or you don't, but the liability still remains with the business. So someone's paying for it. Either your clients do or you, and you don't want it to be you. To kind of close things out a little bit and kind of move forward a little bit, the final piece I'll cover is Marketplace Facilitator. And specifically within Marketplace Facilitator, this is an area that's adding much more complexity, in the sense a lot of retailers say, well, awesome, Amazon's collector remitting on my behalf, I'm good to go, don't need to worry about it, awesome. And nothing could be further from the truth. First and foremost, Amazon sits in those meetings with the Marketplace Facilitator laws, to be honest with you. Everybody knows it's the elephant in the room that they get what they call collector's discounts, which means that for that sales tax that they're collecting on behalf of your business, they're actually getting compensated for doing that. So it's not like they're doing anything because they're nice guys. There's a whole revenue stream from all this. So Marketplace Facilitator, what it means is that when you sell within certain platforms, Amazon, Etsy, or eBay, as an example, they may collect and remit on your behalf. Now, a lot of sellers will get confused by this and saying, well, I'm good to go. It's they're already doing it. The long and the short is that they never delineate, or they never confirm who they're collecting and remitting on behalf of. So the states have no clue if your business is actually in compliance or not. So when you don't register and you're leaning on the Marketplace Facilitator to do these components, you still could potentially be subject to audit. Your liability might be limited at best, but you're still exposed as far as a state wanting to take a peek under the covers and make sure that you're fully compliant, and there's no loose ends. So that's an area to understand. Accumulated liability, when it comes to these states, to be very candid, there's this component called successor liability. And a lot of people get confused in this. And here's the big thing here. If you ever wish to sell your business, tax debt follows that business regardless of ownership. So for investors that, or at some point you have a game strategy to actually eventually sell your business, if you have liability, when the new entity acquires, that liability will follow the new entity. And so, for example, we get hired in cases by JP Morgan, Goldman Sachs, to actually evaluate businesses for tax exposure before they get acquired, because nothing worse than having to drop a couple $1 million on a solution only to find out that you're going to owe $200,000 in the state of California. That's a bit of a nightmare. So in conclusion, the final piece I'll say here, because my time's wrapping up, is don't panic. There are solutions in place. For example, what Ampersand does along with Aqueduct is a culmination of both the services and the technology. We have a tool that's very similar to some of the solutions you may have heard of before, not to name competitors, but like a TaxJar or Avalara. That's pretty much what we do, and strictly in the US market only. Plus, we have a services team that can assist with registration, audit defense, any of those other components. If I give any advice to anybody, it's attack this early on when you're entering the US market. You can make a lot of money in the US market, but if you're not careful, you can lose a lot of money in the US market as well. So it's critical to understand the rules associated with it in this market. In conclusion, thank you all for your time. I appreciate everyone that has listened to us. Any questions we'll be answering shortly. And then also, if you need to reach out to us, if you'd like to hear more about our services or our software, you can reach out to us at sales@ampersandaccounting.com. And we'd love to answer more of your questions there.
Thanks, Peter. Okay, so I think you did it a little more sexier than you should have, but anyways, we need to have a balance. By the way, no, I have a change of plans. I'm a host, so I should be the last until my S stiffens a little bit. So I think Arjun need to continue because he's also in the USA, so we don't want to switch continents all the time. Europe, I mean, North America. So Arjun, tell us more about you. I know a little bit about your story, but I'll let you tell it to our audience. Tell us who you are, what you guys do, what issues you're solving for companies, and we'll take it from there. So thank you again.
Awesome. I will actually share my screen too and just pop through a few slides if that's cool. Okay, I guess clock starts now. Thank you so much for putting this together, everyone. Usually it's funny. I think there's the competition to be most sexy, so I like this. It's the competition to be the most unsexy. And let's see, we're combining several very unsexy pieces of a key process here, which starts with business formation. And what I'm going to do today is actually run through, I think, as Nick said, something which many people don't realize is possible, which is from any country in the world, or I'll put a little caveat there, for most countries in the world, you can actually open up a US LLC and get a business bank account remotely and handle your US taxes. So I'm actually going to walk through that process, demystify some of the top myths, and answer some of the most commonly asked questions around what's the best state to form in, how do you do your taxes, etc. And at the end of the day, or maybe the beginning of the day, what Doola does is we're providing access to American entrepreneurship. And what that means is whether you want to sell to US customers, whether you'd like to establish your business hub in the United States, or whether you'd like to turn your dream business or take that dream idea and turn it into your dream business, that's what we help founders do. And it's been quite a ride so far. Just a little bit of context on us. We started the business about 2 years ago. Over the last 2 years, we've been blessed to raise just under $12 million of venture capital from some of the top investors globally, including Y Combinator, Dharmesh Shah, who's the CTO of HubSpot. And the reason why we have thousands of customers globally who really believe in us and investors who see the same is when we started our company, this was the reality of the situation. As a founder, you know you need to start a business, whether it's to get a bank account for liability protection, for social proof with customers. But the truth is there are over 10 discrete steps, and there are well more than 10 steps that founders have to go through in order to get their business off the ground. And you might be familiar with some of these logos or some of these steps: forming a company, getting a registered agent, talking to the IRS to get a tax number, setting up a bank account, getting your payment processor. As we've heard some of the other folks today, things like bookkeeping, handling sales tax, tax consultations, ongoing support, etc. And very quickly, we had this idea of, wait a second, does this have to be the case? What if we could use technology to automate this process and create this business in a box? And that's been our goal, is a founder clicks a button and these things are now compiled and taken care of together. And that doesn't mean that Doola does everything. For things we can't do, we like to partner with best-in-class companies like the companies you're listening to today and provide truly this best-in-class solution so that founders can focus on what they do best while Doola handles the rest. That is our cheesy tagline or slogan that rhymes. And at the end of the day, what we've built is this really all-in-one platform where you have to only talk to one person or one company doula. And what we'll do is compliantly form your company, get you a US bank account, set up your payment processor, handle your registered agent, get you a virtual mailing address, and then handle or help with your tax filings on a year-over-year basis. What I'll do now is actually just provide you with some information on maybe some of the top questions customers ask and what this process actually looks like. So if you're going to do this process on your own, it's actually a 4-step process, but there's over 10 discrete steps. The first thing is you actually have to form your company. And the way that's done today is you typically go to the state's website, which is a website that looks like it was formed in the 1990s, I guess before there was the internet. So it's a very archaic website. It's not fun to go through, but if you can work your way through that, great. You submit your docs, you wait a few weeks to get your company back. After that, you then have to apply to the IRS to get what's called an EIN. An EIN is an acronym for an acronym. It stands for Employee Identification Number, which is a form called Form SS4. So let's say you navigate those forms, you submit this to the IRS, and you get your tax number. That can take 2 to 6 weeks if you don't have a US social. After that, you now need to set up a US business bank account. And at this step, most people actually don't even realize it's possible. But let's say you know it's possible. Most banks, get this or not, actually won't support founders who don't have a social, but there are a few who do. So you have to navigate that maze, figure out which bank supports you, compliantly apply. And once that's applied and successfully accepted, the final step is boom, you can set up a payment processor so you can accept payments globally. So what we've created is essentially this click button solution to handle these steps. There are certain things Doula does in-house, and then there are certain partners we use. But again, the goal is a founder like yourself shouldn't have to worry about the nitty-gritty. You should worry and you should care that the process is done correctly, because a lot of these are irreversible. They have to be done correctly and have to be done correct the first time. Now, let me run through some of the most common questions we get. The first is, should I form an LLC or a C Corp? Maybe you've heard these before, and I'll answer it actually right here. There is a clear answer. An LLC, a limited liability company, is great if you are looking for tax flexibility, and it's an easier structure to maintain. But the way I actually explain this is, think of just a simple decision tree. If you are raising US venture capital, form a C Corp. Why? Because it's required by US investors. If you are not raising US venture capital, an LLC is 99 times out of 100 the best choice. Much more flexible, easier to maintain, cheaper to set up, and cheaper to maintain as well. So again, if someone ever asks you, now you can quiz people on this, should I form an LLC or a C Corp? If you're raising venture capital, go C Corp. If you're not, oftentimes an LLC will be the best choice. Now, another major question we get is, what state should I form my company in? So here we have some more benefits of LLCs versus C Corps, and I'm happy to share this deck after. But another major question is, what state? Now, the 2 most popular states to form an LLC in are Wyoming and Delaware. The way I would answer this question, though, is if you live outside the US, you can actually form an LLC in any state. Which state's the best? Wyoming is actually one of the most popular because it's cheaper than Delaware, although Delaware is the most popular state in the US for entity formation. So let's take another decision tree. If you live outside the US, you can choose any state. Most popular state's typically Wyoming, actually, because it's cheaper. But hey, if having a Delaware company and the prestige of that helps you sell to your customers, you can go with Delaware. If you live inside the United States, Doula supports US residents, the best state to form your LLC in is the state you actually live in. And this is a mistake many founders make. The mistake they make is that, oh, they think I should just form in Delaware. I've heard Delaware is a good state. But let's say you live in Texas and you form an LLC in Delaware. You then have to end up paying fees in both states. You're paying for a registered agent and you're paying state fees in Texas and in Delaware. So that's one thing I would advise to many founders is typically start in the state you do business in, which is the state you live in, and you can always register to do business in other states. Okay, so that's literally the 2 most common questions we get, but now let's jump into the good stuff. How are we different? How much does this thing cost to do? Using technology, we've been able to automate and streamline a process which lawyers typically charge several hundreds of dollars per hour to do, if not thousands of dollars per hour. So for $197 plus state fees, which differ by state, we can form your US company, get you a registered agent, a virtual mailing address, and help you set up a business bank account. On top of that, there are partners/offerings we have in-house to help you compliantly handle your state filings and your IRS filings too. In addition to that, you have access to what we call the Doula dashboard. And the way you should think about this is think of it as the cockpit or the operating system for your business. Anything for your business, whether it's your legal documents, access to your bank account, perks and rewards, is available in one place. You have full peace of mind that anything for your business is taken care of in one place. You can also access your bank account from right there too. So Doola actually has our own banking offering. And the reason why we built this is because we wanted to be able to provide a much more streamlined way or option for founders to set up a bank account. So now with Doola, all in one go, you get a company, a tax number, and a bank account so that you can immediately start accepting payments in the US dollar or connect to Amazon, whatever it might be. With banking specifically, two things I want to really touch on. One, yes, you can open a US business bank account even if you're not in the United States. However, you will see that there are certain countries that are restricted. Doola does not create this restricted list. This is done on a federal level in the United States. Now, this could change in the future, but these are the only countries you can see here. We have an up-to-date list on our website where you cannot open a business bank account. Second thing is that Doola opens an FDIC insured account. So the bank we're using in the back end, it's FDIC insured. So your money is safe there as well. The other big thing I'll just highlight is there are lots of banking options out there, but Doola is truly one of the only banks that'll actually open an account for a non-US resident and will do it remotely too. There are certain banks out there which will still require you to fly to the United States and walk into a branch to open an account. And that's completely fine. But hey, flying to the United States can be expensive, especially with COVID. That's been tough to do as well. So we want to make it as easy as possible. Literally, founders have said setting up a company and opening up a bank account was as easy as, ordering pizza from Domino's or, I guess ordering Starbucks from the Starbucks app, whatever it might be. It really is that easy. The other thing is we have great partners for other parts of the stack. Let's say you want to set up a Stripe account to accept payments via card, via Google Pay, etc. You can do that. Or maybe you'd actually like to apply to start to open business credit in the US too. We have a partner named Divvy that can do that as well. And for everything else that we can't do in-house, we have an expansive perks and rewards network with tools like Pilot, tools like ChartMogul for your SaaS software, tools like Amazon for AWS credits. Essentially, anything you might need when building out your business, we want best-in-class partners to help you do that. You can see some of the other communities we work with here. Upeka is an accelerator in India. On Deck is a community for founders getting started. So our goal is, again, to be plugged into the top communities and networks. A couple final slides I'll just show in terms of our offering. Really what it comes down to is we kept noticing, and we heard this from founders, that they were tired of just forming a company and being thrown to the wolves with a checklist of things to do. So on the top, you can see these three discrete boxes. You can, pay a one-time formation option to form a company. And then sure, you can do your research on how to do taxes. And then for ongoing support, there's a lot of migraine-inducing info on Google. And that's literally a quote we heard from customers, which I loved. So what we decided is, hey, if we can bundle these things together, we give a customer peace of mind, and we can actually streamline things to bring costs down. Two key things, again, that we do is we want to provide support to founders outside the US. Certain alternatives don't do that. And again, we want to provide that long-term partnership. So at the end of the day, you're able to start with us for a very low one-time fee. And in the future, or even right away, if you need help with your tax filings or things like that, Doola has a subscription which can help. The final thing I'll end with is that we truly are blessed. And the most important thing we don't take for granted is customer reviews and customer love. And we really have customers in over 150 different unique countries who have loved our offering. So the thing we're most proud of, and you can check out our Trustpilot page, is, again, not serving as this one-time partner who sort of helps and leaves you out to go fend for yourself, but really being there for a long-term solution to help you with this irreversible part of the journey. And just seeing these reviews come in is really the most valuable part of our offering. So again, don't take my word for it. You can actually hear from customers around the world in terms of what we've been able to do. And the final thing I'll end with is we're happy to help founders anywhere. It doesn't matter where you are in the journey, even if you actually have an existing US company. If what you heard today sounds exciting, hey, you want peace of mind, you can actually migrate to Doola too, and we can handle things on an ongoing basis. So to wrap up, we're happy to help you form from scratch. You can email us at hello@doola.com. You can also live chat us online. We have round-the-clock coverage. And again, whether you're looking to form a company or migrate, we're happy to be there, happy to answer any questions. And again, help founders around the world take that dream idea and turn it into their dream US business.
Thanks, Arjun. I'm already Steve, guys, so I think, it's not sexy to stay, to be honest. But anyways, we're going to talk about Europe. Europe is a great vacation spot. See, Daniel, he's officially in Europe, but he's not in Europe. And he has summer in the winter. So if you don't do business in Europe, you should come for vacation at least. So, but let me tell you why you should consider that for the e-commerce part as well. So here is like a short presentation about Europe, some numbers, because the only thing that matters at the end is numbers. Now we're talking about VAT, sales tax, whatever. So here is some information about Europe and why you should consider expanding here. So some of you might not know, but Europe has a 750 million population. 450 of those are actually over 18. So all these guys are potential new clients for you guys. If you decide to expand in Europe. So that's the USA plus 100 million more. So that's a lot. Amazon is obviously the biggest marketplace. So here is some data about Amazon. Amazon Europe has over 300 million unique views, which is 50% more than the USA. The other good news, Amazon Europe has a little over 1.1 million sellers versus 2.5 in the USA, which means more traffic, less sellers, less competition. Another thing, if you're selling in your home country, it might be in Europe, it might be in Asia, it might be in the USA, North America, it doesn't matter, you just sell in one market. So by expanding to Europe, you can sell to 50 new countries and multiple languages. Of course, the language is not like an advantage, but it's a whole new continent with multiple markets which are separated. And of course, if you guys are not doing that, if your competitors are not doing that and you do it first, you're gonna obviously grow more than them, you're gonna take them over. So, and the last part, which is of course important, if you start selling in Europe, you would need to have a second storage in Europe to hold your stock, so you will be ordering more from your suppliers, which means you can reduce the cost from your manufacturer. So these are some very good reasons, but just to summarize 450 million less sellers. So it might be hard when you start, but it would pay off in the long term. So I went a little ahead of myself. I forgot to introduce myself. I have the feeling that everybody knows me, but that's not true. So I'm Nick Penev. I'm the co-founder of Extreme Power Brands, which is a partnership agency and network. We have over 1,000 partners. So you're listening to 4 of them today. And that's why we do these events, to educate people for all the pieces of the puzzle that we need. And also, I'm running the partnership for hellotax, which is the host, the sponsor and the organizer of this event. And the story about hellotax is very interesting. The co-founders of hellotax are also ex-Amazon sellers. They're called Christian, he's from Spain, and Christo from Austria. They were selling on Amazon in 2015-16. They were chatting in a Facebook group about their issues with VAT compliance, and one of them suggests, okay, let's do a company which would solve this problem for Amazon sellers. And this is how the company was started more than 6 years ago. And just to fast forward to today, we have over 2,000 paid clients. Most of them are Amazon sellers and Shopify and other e-commerce sellers. We have employees, over 70 employees across the globe. The company is fully remote. And we have 15,000 Amazon and other e-commerce sellers as subscribers. And me personally, I used to be a client of hellotax before I was offered to take over the partnership, which is a very good thing because I love partnerships, I love connecting with people, and I love doing these events. But just to come back to the future, and why, and when expand to Europe, of course, if it's that easy, why people are not doing that? So here is the answer. There are some blockers. So what are the blockers which are stopping people to expand in Europe? So the first and the most important part is having the right product. So this guy on the horse, he's sexy. So the image is not good, but anyways, that's what we have in the presentation. So having the right product. We have a lot of partners who can help you out to do product research. If you don't have a product, you can still do product research, but without product, you have nothing to sell. If you have nothing to sell, you don't need Link My Books, you don't need Ampersand, you don't need Ecommerce Accountants, you don't need doola, you don't need hellotax. So this is the first and the most important part. But once you have that, there is tools that can help you to do the product research. And if you do that, you'll be very surprised that in some markets in Europe, you have no competition. And that's true because a lot of companies say, okay, it's hard. Yeah, it's hard, but once you establish yourself, it's a long-term revenue stream. This is a quote from a partner of mine who runs one of the biggest agencies in Europe. So remember that. So having the product is the first thing. The second part about expansion to Europe is the value-added tax, VAT, product compliance, fiscal representation, customs, and logistics. So this might sound to you like a lot of problems, but the good thing is that all these companies, they're partners of mine. I can recommend you multiple companies who can help out with that. We've done that for hundreds of sellers, and we know which are the reliable ones. So we have all the solutions. But the first thing that you need to do when you expand to Europe is to check if you need to set a product compliance, because sometimes that might take 3 or more months. For some type of products, you don't need product compliance, so you can skip that. So the next thing that you would need is VAT. This is something that we do for hellotax. Fiscal representation is something that you might need in some markets, and that's why we always advise companies where to start so they can avoid paying the fiscal representation insurance, which is a guarantee which you're going to pay your VAT. The other thing that you need to know is customs and logistics, because you need to get your products to Europe. So we have partners who can help out with that. They are tailored for e-commerce and they do that all the time. And the last blocker, it's culture and language barrier. This is probably one of the most important parts, because if your translation is not right, people are not going to buy your stuff. Even for English, US English and British English are much different now. So if you have your listing in US English in the UK, you're not going to do well, and vice versa. So that's why we have partners who do localized translations, and they know how to do your listing, how to do it in a localized way so people can buy your stuff. So just to summarize it, we got you covered. You come to us and you're not going to hear no. I'm going to tell you, okay, let me connect you with these guys. They're going to help out. So once we do the VAT for you, we're going to connect you with partners who can help with the rest. And four of them are here today. So let's fast forward to the next thing. So what problem are we solving? So when you expand into Europe, you need to be tax compliant. You need to have VAT. If you don't have VAT, Amazon is not going to allow you to set up an account. So this is the first thing that you need. So 4 things that you need to know. You need to know what's your VAT liability from the past, from the present, in all the European countries where you're operating. By operating, I mean you're either holding stock or you're selling your product. Of course, if you hold stock in multiple countries, you would need to register for VAT in different countries and file returns in each of those markets. In some markets, when you're moving stock from one country to another country, you need to report the movement of goods in your reports. And the last part, you might be selling on Amazon, you might be selling on Shopify, you might be selling on other marketplaces or platforms. You need to have complete visibility across all your sales channels. If you don't, the tax guys, they don't care. That's your responsibility. So these are things that you should know. If you use it yourself, you should do it. You should do it yourself. So that's why, we're doing that for sellers. So they don't need to worry about that. A lot of companies are asking us, okay, but where should we start in Europe? There's so many countries. Now, if you go to Amazon is going to tell you, okay, guys, let's do the pan-EU. Let's charge you for 5 or 7 VATs because, we make money from the fees. Don't listen to Amazon. They make money from the fees. So this is not a smart move. Whenever you expand in Europe, you should select ideally one location. Poland, Germany, UK are one of the easiest ones. The only issue with UK is obviously after Brexit is not that easy like before, but there is like a way around that. But just to summarize it, like Poland, Germany, Italy, and like UK are the easiest ones. Germany is the one that we recommend the most, and I'm gonna tell in one of the next slides why we do that. And the one thing that you should avoid like the plague is your first location is Spain. It takes probably 4 to 5 months to get the VAT there. They require a lot of documents, notary translation, and all this kind of stuff. So it's really hard. So don't go there unless you're a Spanish speaker and you would like to use the localization there. So that's in regards to the complexity for the VAT process. So the next thing, why do you need VAT? Before July 2021, you need to register for VAT once you hit the threshold in one market. So I'm not going to go into details. You should not worry for that anymore, because the one-stop shop was introduced back then. So whenever you hit 10,000 euro in sales, you can opt in and register for the OSS, which means you have one VAT, you register for one OSS registration, and you can make sales from the country where you store your goods to all the European Union markets from one location. You pay your VAT in this country, you pay the tax authority, and the tax authority in this country is remitting between the other tax authorities. But just to summarize, you just need one VAT and one OSS to sell to B2B clients across the whole European Union if you hold stock in just one market. So it's much easier right now. The second reason why you need VAT is if you hold stock in any given country in Europe. So if you hold stock in France, you need VAT there. If you hold stock in Spain, you need VAT there. If you hold stock in Germany, you need VAT there. So if you hold stock in any of these markets, you must have a VAT registration. This is something about Amazon and what happened. I'm gonna go into details, but if you're selling goods from the UK to the EU Amazon marketplaces, and if the items you're selling are under 150 euros, you don't need to go for customs. I'm gonna share the slide after the event so we can review the details, but this is very important, for certain type of products. Of course, shipping would be a little more, but this is a way how we can continue selling from the UK to Europe and vice versa, from the EU to the UK after Brexit. This is for Amazon. This is the reopening of the European Fulfillment Network, which was done last year. And you would ask, okay, so you'll be talking so much, my head aches already, but it doesn't matter. No, just to summarize now, what is the solution and why I recommend that? So whenever you expand in Europe, we recommend to either register for one VAT in the UK or Germany. We recommend Germany because of Brexit right now, and for a few other reasons. Germany doesn't require fiscal representation, so one of the blockers is removed. The second thing, German tax authorities are actually allowing companies to apply with their documents in English, so you don't need translation. So, advantage too. The next thing, which is very important and a lot of companies don't know, is US sellers, US businesses. If you apply for VAT in Germany, there is a specific tax authority which deals with your VAT application. So it might be funny, I'm not sure if John knows that, but UK companies wait longer than US companies to get the VAT in Germany because there is a different tax authority which deals with UK application and a different one which is dealing with USA ones. So the USA get that quicker because there's less demand. And it's actually few things that can make a change for you guys, and you should take advantage of that. The other part, we have a customs partner who can help you to import your stock, and that's it. Here is some good news. If you're a non-EU company, if you sell on Amazon, you don't need the OSS registration because Amazon is going to use their own OSS registration. So you don't need to do OSS registration, you just need one VAT in Germany. You can make sales and you can make deliveries to all the European marketplaces. All the EU B2B clients from Amazon. Just remember that one VAT if you're a non-EU company selling on Amazon. If you also sell on Shopify or any other platform which is not the so-called DIM support, you must have OSS in order to be able to sell across the whole European Union to B2C clients. And of course, if you're a European-based company, you need to have one VAT and one OSS in your home country, and you'll be able to make sales and deliveries across the union. So the biggest difference is that if you're a non-EU company selling on Amazon, Amazon is going to collect the VAT and pay that to the tax authorities. If you're a EU-based company, Amazon is not going to collect the VAT, so you need to do it yourself. And of course, you need to do VAT monthly filing and plus OSS quarterly filings if you have the OSS. And the good thing is that we have all that. I'm not going to do the demo right now, because I think I just talked too much, but we're going to send that in the follow-up email afterwards. But just to summarize, we're built by Amazon sellers. We have a SaaS solution which allows you to connect your Amazon account, Shopify account. We pull the data, we file the reports, we either publish the return, you pay that, or Amazon collects that, and that's it. You have an account manager which is dedicated to you. Our account managers, they speak English, German, Arabic, French, Italian, Spanish, Turkish, I might Martian, any language. So we got you covered here. And of course, the last but not the least is that we have a partner network of over 450 partners just for hellotax. So whatever you need, and not only in Europe, anywhere, I have a partner who can help out. And I'll be more than happy to advise you, because sometimes, like that, Amazon is not always giving quite great advice in regards to the VAT. So we're happy to help you out. And of course, we're having giveaways always. We're giving away 6 free VAT registrations with the value of over 1,000 for the first 6 people who try to claim them. We're going to send an email after the webinar with not only our giveaway, but all the giveaways and offers from everybody. And I'm not sure why I got a black screen, but we're done, guys. Now I think I was the one who spoke the most, which is funny because I told you guys to be short and I already did anyways. I mean, I need to cut my presentation. So anyways, guys, now I think we have plenty of questions. I saw that you guys have been answering the questions in the meantime, which is very good. So we don't keep everybody waiting. So let me actually open the questions from the people who could not attend. So, and we can answer those. Just give me a second. Okay. So, so here is the first question. This is from Annalisa. Do I need to register for UK VAT straight away? What about the £85,000 threshold? So this is for you, Joe.
That's a very good question, Annalisa. It depends on whether you're a UK business or whether you're a non-UK business. As I said in the presentation, if you're a non-UK business, usually there's no threshold and you need to register straight away. But if you're a UK business, good news is there is a threshold.
Okay, thanks, Joe. So let's move ahead with the next question. This is from Drew Preacher. What's the best state to form an LLC in? I think you mentioned that, but Arjun, you can answer that again. So what's the best state to form an LLC in?
If whoever asked this question, if you can quickly just comment where you live in the world, but I'll do the decision tree again. If you live outside the United States, you can choose any state. We've actually seen Wyoming is the most popular because the first LLC was created there, great for e-commerce businesses or online digital businesses, and a very low annual fee. So that's if you live outside the US. If you live inside the US, best state is going to be the state you live in because you're doing business there. And doing business literally means you're on your laptop, doing calls, etc. So outside the US, any state, but gun to my head, I'd recommend Wyoming. Inside the US, the state you live inside.
Okay, thanks, Arjun. So moving ahead to the next question, that's from Emre Can. Can you help with ketchup bookkeeping? I don't know what's ketchup bookkeeping, but it sounds either for Dan or for Joe. Can you help with ketchup bookkeeping?
I'll answer this for Dan. Yes.
Okay.
And if assuming they're an Amazon seller, we would use Link My Books for the catch-up bookkeeping.
Okay.
I thought you said ketchup bookkeeping. I was a bit confused about what that was.
Yeah, let me read the question. Can you help with ketchup bookkeeping? That's the question.
I think what they mean is they've got years of books that need to be, or books in your case, Dan, that need to be tidied. But yeah.
So with Link My Books, you can go back up to 2 years. So if you haven't done bookkeeping or you need to do some catch-up bookkeeping for up to 2 years, we can pull the data from all the sales channels for up to 24 months, sometimes even longer. It just depends on how long they're keeping their reports around in the likes of Amazon, etc.
Yeah, by the way, it's good that you guys, they sent this question from before, but in the VAT part, you can do backdating. So a lot of times now, sellers come to us and they tell us, okay, we've missed paying and all that, so we need backdating. So we can do backdating on your end as well. So let's go ahead with the next question. Okay, let me just see the list. Okay, that's from Heather. Can I use the old VAT regime instead of the OSS? I assume this is for me. Yes, if you want to make your life more complicated, but don't do that. Once you hit €10,000, opting for the OSS one VAT, one OSS. Otherwise, if you don't do that, once you hit the threshold in any of the markets, you will be forced to do multiple VATs, and you don't want to do that. It will just make you just need to deal with something that you can avoid at this stage. So the reason why companies do multiple VATs is because they have established that the other markets are already good for them. They're doing good sales, and it's justified to have a storage there. So that's why the new regime allows you to have one VAT and OSS, so you can start selling from one location to multiple markets. So it's easier for you. It encourages sellers to expand. And of course, once you're doing well, you can set up multiple storages, and then you would need multiple VAT numbers. So another question, that's from, I think it's from Ampersand. Hey, Peter, can you tell me what is the one biggest mistake people actually do when they set up their sales tax? So what is, I guess, number one mistake that they do? Or
they one of the biggest things we see is because of the economic nexus components, a lot of people misinterpret that they can disregard the physical nexus requirements. And so that can be very confusing because they feel like they're protected and safe because they're like, oh, I haven't done $100,000 or 200 transactions in this state, I'm good to go. But the long and short is that if you're using Amazon FBA, you're going to be placed everywhere. And so the state art is within its right, depending on the first day that Amazon sent your inventory there, to request an audit, if you would. The other pitfall a lot of people don't understand is that the states have already subpoenaed Amazon to turn over all third-party seller data. So when you look at California or Florida or New York, for example, they already have your information. So what you'll see a lot of in states like California is they'll gatekeep registration. So you can't register with the state until they do a deep dive search for your entity. If in the event that they find that you've been selling on Amazon because of that information they have, then unfortunately they're going to slap you with an audit right out of the gate, and they're going to prevent you from registering with the state of California until they can confirm accordingly. So that's one area people misinterpret as the physical nexus versus economic nexus, and thinking they're safe because they haven't hit certain de minimis economic nexus thresholds.
It's too very, very unsexy answer,
That was the goal.
But that's why I need to go talk with Peter. I mean, you don't do it yourself. I mean, Europe, it's like a fairy tale, I mean, compared to what you just answered. But let's go to the next question. So this one is for, okay, there's an LLC in the question, so I'm sure it's for Arjun. So this is from Artemius. Okay, Artemius. Can you actually form an US LLC and get a bank account from anywhere in the world and not pay IRS taxes?
Okay, I guess that's the $1 million question. So yes, let's go piece by piece. You can form an LLC from any country in the world. That being said, as I showed on the slide, and we have this up-to-date information on our website, there are certain countries where, due to US regulations, you cannot open a business bank account. And these are determined at a federal level. Doola does not determine this. So for that specific list of countries, there's several countries in Africa, some countries in the Middle East. While you can form an LLC, you cannot get a business bank account. So go to doola.com, you can live chat and ask for the list, or you can check out the exact list of countries, but that's step 1 and step 2. Okay, now step 3, I won't avoid the question. Can you avoid paying IRS taxes? The crash course here I'll give is it depends on whether or not you have effectively connected income with the US. So the way you can think about this is, if you have, and I think this was mentioned in maybe a few of these slide decks, if you have a nexus in the United States, meaning income that is being generated or driven through the US, then that is taxable revenue you're generating in the US, and you're going to have to pay US taxes. However, if you're a purely online digital business, no physical location in the US, then what you have to file is called Form 5472, which is an informational filing with the IRS. So technically that is a tax return to the US, but it's an informational filing. And as an LLC, you would then pay taxes in the state that you live in. So what we advise here again is, whether you're working with Doola or with another partner, talk to a professional. Talk to a professional in your home country first, and then always in the US, talk to a professional. Doola has a CPA in-house. There's some fantastic partners here as well who can give you legitimate tax advice. But again, if you do not have physically or effectively connected income in the US, an easy way to think about that is nothing actually physical in the US, then you would have this informational filing. So yeah, to recap, there's a quick summary. LLC you can form from any country. Check that list to be sure that you can open a bank account. And then IRS taxes depends on whether or not you have effectively connected income in the US.
And if I could add a piece to that, Arjun,
Please.
the only other component I would add is also check for the tax treaties between the United States and those countries that they reside in as well.
Okay, guys, so we have 3 more questions, and I think we're done. So the next one is for, I don't know, I think UK. Okay, VAT in UK, so that's for Joe. So that's from Alistair. Okay, do I always have to pay 20% VAT in the UK? What about the flat rate scheme?
Yes, as I covered on the talk, we spoke about the flat rate scheme. So there are times where, although you're still collecting 20% VAT, you may need, or you may be able to pay up a lower effective rate of VAT. For most e-commerce businesses, the flat rate is 7.5%. So the effective rate works out as 9%. But yeah, as I said, I know I bombarded through that presentation, but yeah, although there are drawbacks to it in that you can't reclaim purchase VAT. But yeah, good question. Thanks, Alistair.
Okay, thanks, Joe. Actually, we have 2 live questions. The one is from Amit Gupta. We will email all questions and answers covered in the session, please. Yes, we're gonna send the recording to everybody. We're gonna have a breakdown so you can fast forward to each section, to each speaker, the Q&A session. You can see all the 60 pieces or all the different pieces, as you prefer. So then we have another question from Susie. Do you need a US bank account to be able to pay the sales taxes? I read previously that most states only accept sales tax payments using ACH transfers from US bank. Thanks. I think that's for you, Peter.
Yeah, that's a great question. And I'm going to give a 2-part answer. I mean, I think Arjun kind of resolves some of that problem in his solution with Doola. The answer is yes. And here's why. In the United States, there's watchdog agencies, et cetera. We're very hyper vigilant towards anything that might be quote unquote operating with terrorist organizations from a banking perspective or financial perspective. Just today, they just announced new crypto enforcement. So the US is laser focused on not only how the money is transferring, but also sources and other such. And they use the US banks as a way to vet individuals to ensure that they pass a certain criteria and requirement. I have to be honest, I tip my hat off over to the Doola guys, because however they figured out how to break that code, that's impressive. That's all I can say there. So, but yes, the long about answer, unsexy answer is yes, you have to have a US bank account to remit payment to US states for sales tax.
Okay, thanks, Peter. We have a few more questions here. The following one is, okay, that's from Link. Do you take into account sales where Amazon has collected and remitted the VAT to the HMRC directly? I think that's for both Dan and Joe. Whoever of you guys can answer that. So do you take into account sales where Amazon has collected and remitted to the VAT to the HMRC directly?
Yeah. So this is a rule that came in post-Brexit, basically. So if you are a UK business and you're storing inventory outside the UK, and then that inventory ends up going to a UK customer and it's under a certain value, I think it's £135, maybe Joe can correct me there, then Amazon will collect the VAT on those transactions and remit them directly to HMRC. And then the second one is if you're not established in the UK, then regardless of where your inventory is stored, and regardless of the value, if the inventory is stored outside the UK and it's going to a UK customer, regardless of the value, then Amazon will collect the VAT on those as well. The good news is that you don't really need to know all the rules, because Amazon pass us that information and we then break down those sales and separate them out and treat them as zero rated income so that you don't pay VAT on them a second time. Maybe Joe can give more detail on the actual rules.
I told you all Dan wasn't an accountant, but he knows his stuff. I think you answered that perfectly. basically, regardless of whether you use Link My Books or not, or Books or not, the Amazon VAT calculation report has a column on it which shows whether or not the marketplace is or the seller is responsible for collecting the VAT. So typically we do use Link My Books, but in the cases where we need to use another route, we would definitely still be able to calculate it, and so you're not paying it twice, basically.
Okay, thank you guys. So we don't have any more questions. Let me just double check one more time. Yes, no, we don't have any more questions. So thank you for everybody for joining. We're gonna have some giveaways for you guys. So watch out for your emails. Check out your emails tomorrow. We're giving away 6 free VAT registration. Dan and Link My Books are giving away 10 actually paid plans with 50% off for the first 3 months. Doola are waiving a state formation fee for the webinar registrants. No, you're gonna have the details. You have very sexy, unsexy coupons, unsexy 50, unsexy fee. Ecommerce Accountants are giving 100% discount on sign-up fees for any non-UK business looking for UK VAT compliance. An additional 10% discount. The code here is very sexy, hellotax. So, and Peter has an offer which is gonna include in the email later on. But just to summarize, guys, it was a great webinar. I guess people love listening about taxes. So my assumption for the Unsexy part was not true. But we have one more question. I'm gonna answer that from Dave Kang. Was the webinar recorded? Can we get a recording? Yes, of course. I mean, we streamed live, so you're gonna check out the recording there. We're gonna send an email to everybody who attended or anybody who did not attend but registered. So you're gonna have everything. So thank you guys. Enjoy the evening down in the summer in the Atlantic. Joseph, you're in the UK. I don't know what to wish you. I'm in Bulgaria, so we got the spring weather today. Arjun, Peter, you guys are in the East Coast. I have no idea what is the weather, but you can enjoy the day. And thank you for everybody for joining, spending the time, answering all these questions. And I'm going to be sending you the recording and the breakdown of the session. So if anything, you have the details for all our speakers and you can check it out. So thank you again. Adios, muchachos.
Thanks, guys. Thank you, everyone.
Thank you.
Thanks.
Bye-bye.
Thanks, Nick.
Thank you.
Thank you, everyone.